Hello and welcome back to the Geordie Pig Investor channel. Today we are going to look through our August portfolio update in my Trading 212 portfolio as we have reached some new all-time highs with the portfolio value. We can see that at the start of August we had a portfolio value of £22,881 and we had invested £22,128 of that, being a return of over £750 at 3.41%. At the start of the month, we had a little bit of a turbulent time and actually went into a negative for the first time since opening the portfolio 12 months ago. But I trusted the process and since then has recovered very, very nicely throughout the entire month. And we've actually ended the month on a return of 4.42%, up over £1,000 right now, having invested £24,200 in total, and the portfolio value now being over that magical £25,000 mark. Really happy to see this number fall. It was a number that I had set at the start of this year to try and hit by the end of the year. So to only have just gone into September and have already hit this is really, really promising, and I'm really happy about that. So just means now we can continue pushing on throughout the rest of this year and see where it ends up. Within the portfolio itself, I will take you through some of the stocks right now, and I'll show you all my positions, as I'm always as transparent as possible on this channel. I show all my positions and never hide away from any negatives that I have in my portfolio, whereas if I know there's a lot of YouTubers out there who aren't as transparent and will hide negative positions by selling out of them and only showing the positives and the green positions. I've never been like that and I never will be like that, so I take great pride in being as open and honest as possible, as I hope you can tell. And as well as that, I always try to answer any questions that you have about my portfolio, so if you do have any, please let me know in the comment section down below and I will try my best to get back to you. So we can see that my main loser in the portfolio that has really been killing the portfolio as of late is Burberry. It has had a very turbulent time, being down 70% this year. I felt near enough the full brunt of that, being down 40% myself, which is close to £400. So it's a big burden on the portfolio, but we did receive £30 in dividend payments from last month, and although they have suspended the dividend payment right now, it's a position that I hope by suspending the dividend payment, it means that the new CEO who's coming in can get a little bit of structure back in the company and that price can recover somewhat, because it's a position now that once it recovers to a point that I'm happy with, I will be likely selling out of it. So that's the main loser in the portfolio. We can also see I have a couple of other red positions, BP being down about 6%. We have Diageo down close to 10%, being down quite a bit, £170. We have Chevron, which is basically flatline, only down 0.83%, but apart from that, the majority of my stocks are still in the green and performing really well. So out of my 32 different stocks and ETFs, we only have 6 of them in the red, which is, in my opinion, very, very good. And I'm very happy with the majority of my stocks in my portfolio. This month we have trimmed down a couple of positions, so we have sold out of a couple of positions because I wanted to reduce down the amount of stocks I had in the portfolio, and every position that I sold out of this month was for a profit, so we made a little bit of money on those positions as well, which was very nice. And we actually invested into a new stock, which is Louis Vuitton. So we can see this stock here. I bought 0.2 shares, which was just over £100 worth. It is a French stock, and I'm looking to do a stock analysis on this company, so look out for that video. But I felt like at this current price, it is very, very attractive. I believe over the long term that this company will recover back to all-time highs that they have been at. As we can see, they have actually been all the way up close to €900 per share, whereas if right now they are down at around about €670 per share. So I do believe long term that this position will pay off, and I'm hoping actually that they kind of stay as where they are right now or even dip a little bit further, so I can bolster this position up, add to it, and get a little bit more money in before we start to rebound back up, because I do believe that will happen. But you can see the difference between American and UK stocks if I take you over to my pies. In my US growth dividend pie, we have 10 stocks here, one of them being a European, Louis Vuitton. The reason I have that in my US growth stock pie is because I do have to pay dividend tax on them as well. So I know that every position in this portfolio I have to pay tax on my dividends for, whereas my UK growth dividend stock pie, I will not pay any tax on any of these positions, which is really, really nice. In my UK growth dividend stock pie, we actually have 19 positions in this one, so nearly double the amount of in the US one, and we can see it hasn't quite performed as well if you look at the front value of it, because it is only just in the green, whereas if the US growth stock pie is now up over 7%. However, I do receive a lot more dividends from this pie, as these are my main dividend focused stocks in here, whereas if the US one is definitely more growth focused. I do have a mix of the two between the two pies though, and like I say, I'm just very, very happy with my allocation between them. I feel like I've picked my stocks quite well, and the fact that the majority are still in the green is a really good sign. And August, although started off a little bit on the ropey side, it has definitely recovered very nicely, and we're in a really good position as of right now. We have also had our highest ever dividends received this month, being over £70. And if you haven't watched the video on the breakdown of which stocks paid me that this month, please go check it out. And then finally, we have our ETFs. Our ETF pie, there's been a slight change to this one. Our Vanguard FTSE All World, we've decided to swap out for the Vanguard FTSE Developed World, because over the last few years, when comparing these two ETFs, they are very similar. However, the FTSE Developed World has actually had a better return than the FTSE All World, and I'm very much happy to take that slight risk by changing across into this one, which is ticker symbol VEVE, whereas I was in VWRL. So my plan with this portfolio now is to continue dollar cost averaging in, as I have done since starting this portfolio off, and that's going to mean putting in £100 a week between these three ETFs now, and I won't put any more money into the FTSE All World ETF anymore. I'll be putting £15 a week into the EQQ Nasdaq 100, £40 into the FTSE Developed World, and £45 in the S&P 500 fund. That's where my allocation is. That is what I'm trying to stick to on a weekly basis, and then also doing my stock picking on top of that, which I really do enjoy. But like I say, now we can see the portfolio really shaping up, being worth over £25,000, and I'm really starting to feel the full effect of that snowball, considering that my dividend payments have 10x'd since January, which is quite incredible to think about when it's only been 8 months since January. Very happy with how things are going. How's your current portfolio looking? Let me know in the comment section down below. Is there any stocks that you think in my portfolio you'd want to sell out of right now, or any stocks that you are looking to add that I maybe have a position in right now? The only stock I think I regret getting into for the amount I have is probably Burberry, but apart from that, I'm very, very happy with all my positions and comfortable with where they are. Let me know your thoughts in the comment section down below. Please like and subscribe. Thanks for watching. This is the Geordie Pig Investor, over and out.